Hi, good evening, everyone. Thank you very much for joining us on our student finance webinar this evening. I'm just going to give it a couple of minutes to let people join us and let people come in. You may have heard when we started, the webinar is being recorded. This is just for people who can't make it this evening. If you do want to watch it back again, then it will be on our YouTube channel, which will be linked from our website. Um, and there are, oh, sorry, I'll just start again. I should probably introduce myself first. For those of you who don't know me, I'm Laura Piercy. I'm one of the associate directors of LeSwap. And one of my roles is around university pathways, careers, things that students do once they leave us at the end of year 13. Lots of you will know me from doing other webinars like this or working on UCAS or other pathways type things that I've done at LeSwap. So, there is a lot of detail in tonight's webinar. I'm going to start at the very, very beginning with what student finance is, the very, very basics, and I'm going to try and go through most of the ins and outs of that. I'm going to try and explain what your role is as a parent or a carer in terms of supporting student finance, talk a little bit about the sort of longer term implications of it, about repayment and things like that. And then at the end, I'm going to talk a little bit about finance at university a bit more generally, and about also what happens if you don't complete your degree or something means that you have to leave university early. So I'm going to try and cover absolutely everything. Um, that means, as I say, that there is a lot of detail. Therefore, if you do want the slides, you can just drop me an email and I will send the slides over to you. There are also quite a lot of links in the slides as well that may be useful. My email address will be at the end of the presentation. If you do, we'll have a bit of time for Q&A at the end. If you do want to ask any questions, please do drop them in the Q&A. If you move your cursor, it should appear at the bottom of the screen, a little speech bubble with a question mark in that says Q&A. If you can't see it, if you click on the icon that says more, then you should be able to bring it up there. And I am going to answer questions at the end. So just so you know, I'm not ignoring you if you ask a question part way through. So let's crack on because we don't want to be here uh, all all evening. Oh, sorry, start it from the beginning. That would be helpful. There we go. So just this is a photo of our year 12s playing rounders in induction at the start of the year. I just really like this photo. I think it's a really, really lovely photo of our students and a really nice indication of what it means to be out the swap. So, from the absolute beginning, then, and I do understand that a lot of you may know this already, but do just bear with me. So, student finance, when we speak about student finance, what we're actually talking about is Student Finance England, which is the government-backed organisation that offers financial support to all students who live in England who are entering higher education in the UK. That also means if you're going to university in Wales or you're going to university in Scotland or Northern Ireland, it is still Student Finance England that you are dealing with because that's where you live. So there are actually two loans that you can apply for as part of student finance. There is a tuition fee loan and there is a maintenance loan, a living cost loan. They're split into two separate loans. Um, as it suggests, one covers the fees, the actual cost of going to university, the charge for going to university, and the other is to support students with their day-to-day living costs. The amount that you can borrow, that young people can borrow, is based on several things. It's based on the course they choose and where they're studying. So whether they are in London, out of London, living at home or away from home. And it also depends on the student's home circumstances. So basically the income of the parent or parents that that student lives with. Please do remember that all monies from student finance are a loan. They do have to be repaid on graduation, and there are circumstances again that dictate when you start paying that, and I will go into that as we progress this evening. So, Who is eligible? All British citizens that doing their first degree in the UK are eligible for student finance. All EU citizens with settled status, and there are some other groups as well, people who are eligible for student finance. It is what. Please remember that eligibility is based on the student status. So it's nothing to do with the parent. It is based on the status of the student themselves. So obviously, for some people, the first thing that will be important is to check and make sure that your child is eligible for a loan. So UK Kickstarter are the best place to check, and that link there that's coming up in purple, the complete university guide, that is actually a really nice, clear explanation of who is and isn't entitled to student finance. And there's the link at the bottom to the full government information where you can find out absolutely everything that you need. So firstly we're going to talk about the fees loan. And we'll come on to the maintenance loan later. So, the maximum tuition fee that a university or college can charge new students in the year beginning 2026, so from September 2026, is £9,790 per year. So most students will do a degree that takes 3 years. Most undergraduate degrees are 3 years. You have to pay that each year that you are enrolled on that course. If you do a different kind of degree, if you do a degree with a that is a medical degree that's 5 years. If you do a degree with a foundation year, that's 4 years. Again, you will need to pay that amount for every year that you are enrolled on that course at university. However, you do not pay any of it up front. You pay none of it to the university before you start. You only start paying it back once you earn over a certain threshold after you have graduated or after you have left university. So, as I said, that's how much the fees are going to be per year from this year. The full cost of the fees is covered by a tuition fee loan. So the tuition fee loan isn't means tested in any way. If you apply for university and you go to university, you can get a loan to cover all of your fees. There is no checking. You don't have to submit any financial information for this part of the loan. If you're going, you can get that loan. The students themselves never see this money. It goes straight from Student Finance England to the university, so it doesn't go through the student at all. And this money that you're paying the university covers all the costs that are associated with your degree. So it covers the wages of all your staff, your teaching staff, your admin staff, facilities costs, libraries, IT, labs if you're doing science, student support, all those other kind of costs. That is what those fees go towards paying. What they do not cover are the students' individual living costs. So it doesn't cover accommodation, textbooks, course materials, personal tech, or anything like that. That has to be paid for separately out of your maintenance loan. This is the amount of money that the university charges to educate you every year. Um, as I said, you don't have to pay any tuition fees up front. If you want to, you can. You don't have to take a loan for the fees. You can pay the fees yourself if you want to. You don't have to borrow the full amount. It's up to you. As I've already said, it doesn't depend on household income, and it is repayable once the student income is over £25,000 a year before tax. More on that later. So, one thing I imagine I'm going to get a few questions about this evening, or I may get a few questions about this evening, are the way that tuition fees have been something of a kind of media. I had a lot of media focus, more media focus than usual in the last year or so. And this started to happen last year. There was a lot of stuff in the news about the fact that tuition fees were going up, and they did go up in 2025. They didn't go up very much, but they went up. They went up by 3.1% to reflect the rises in inflation. So they went. So this year they've gone from £9,535 2025 to 9,790 this year. So they've gone up by £255 a year. And tuition fees now may increase each subsequent year, but only in line with inflation. So do be aware that the fees that you will pay in your second year at university may be slightly more than the fees that you paid in your first year, and the same as it goes on, but the increase will be quite small and it is capped. Maintenance loans, so the money that you get for your living costs, they're also going up in line with inflation. So, not the best outcome, but at least a little bit better. Moving on then to the maintenance loans. This is the second loan that you can apply for through Student Finance England. And this is available to help with living costs. So the biggest one is always accommodation. You've got to pay your rent. But the maintenance loan is also intended to pay for everything else that you need. So your travel, your books, your clothes, your photocopying in the library, anything else that you need to pay for while you're a student. All students can get some maintenance support. But this loan, this part of the loan, is means tested. So, as I already said, it depends on where you study, what you study, and the income of the parent or parents who the student lives with. Unlike the fees loan that goes straight from student finance straight to the university, this loan is paid directly into the student's bank account every term. So they get paid 3 times a year. The amount is split up, and they are then responsible for managing that money, including organising and paying their own rent if they organise and pay their own rent. So this is something to please have a conversation with your young people about. That they will have to manage that cash as it comes to them. Again, just like the fees loan, this loan is repayable, but only once you leave uni and only once you're earning £25,000 a year or more. If you never earn £25,000 a year, you never pay anything back. If at any point your income goes below £25,000 a year, payments stop. So the loan is paid, as I said, 3 times a year. The students get an amount in September, an amount in January, an amount in April. So roughly if your university has 3 terms, most do. The September and January ones are the same, but the amount in April is slightly bigger because it also incorporates the summer period. So you get slightly more money. So how much loan can you expect to get? This is the maintenance loan. Fees loan, as I've said, everyone gets the same. This is the maintenance loan, the living costs. So if you are living at home, so you're going to university, but you're living at home, you can get up to just under £9,000 a year. Again, means tested based on your parent or carer income. If you live away from home, but outside of London, it's up to £10,500. If you live away from home, but in London, it's up to nearly £14,000. And then there's a slightly different one if you're doing something called study abroad, which I'm not going to get into this evening. But as you can see, the amounts are different because it takes into account the fact that if you live at home, then you are probably paying much less rent, if any rent, than if you live in student or private accommodation. And it also takes into account that living in London is more expensive than living in most other places in the country. So the loan, if you live in London, is more. I'm not going to read out everything on this slide, but you can see here just about how the maintenance loan amounts break down. So the more the household income, the lower amount on maintenance loan is given to the student, and that is the same across all 3 categories. As you can see, once the household income gets to £60,000, then it tops out for living at home and commuting at just under 9 grand, and anything above that, anything of the household income above that, the student gets the same amount, and then it's staggered for the living outside of London and living in London amounts. So this is the means tested part, as I said. The fees loan isn't means tested. Everyone gets the same amount for that. There are various calculators online that you can use to kind of work out how much you're going to get. And some of those are linked in this presentation, which I'll show you a little bit later. So how are you assessed then? So as I said, the maintenance loan is means tested. How? Student finance decide how much loan the young person is entitled to, and it's based on these things. It's based mainly on the combined income of the student's main household. So if the student's parents don't live together, if they live separately, it's based on the household income of the parent they live with most of the time. And that is a household income. So if that parent lives with a partner, is remarried or lives with a partner, it will also be based on their income too. So it is the income of the whole household. There are a few circumstances in which it doesn't include that. This is mainly if a student is married, which is very uncommon, obviously, for students in sixth form, but for mature students, it's more common. If a student's been in care, if they, again, if they're a mature student, they've been financially supporting themselves, or in a very, very few cases, a student can apply to be for status as an estranged student. It is quite hard to get estranged status. You really have to prove that you have no contact with parents, but it is possible for a young person to do if they are in that circumstance. And there is a lot of information, really clear information on the UCAS website about those different categories. Things that count as household income. So it is any income that a legal parent or guardian receive. So it includes earnings, benefits, pensions, anything else that is classed as an income. As I said, if the student lives with one parent, their cohabiting partner, the partner's income is included, but income from any siblings living at home isn't taken into consideration. It's only the parent and anybody in a position of parental responsibility. So if you live at home, if you go to university and your elder siblings live at home and they've got full-time jobs, their incomes are not included. How does the finance application work? So you log in. It's very kind of it's quite easy, the process, but it's quite ugly. It's quite a it's a government website. It's not the most attractive, but it is quite straightforward. So you will both need to create an account, both the student applying for the finance and a parent or a carer supporting that application will both need to create an account on Student Finance England. Uh, there's the website there, nice and easy to remember. If you just put student finance into Google, it will obviously come up. Applications opened on Monday, so you can apply now. If you're applying for a fees loan only, then that opens slightly later in March. If you're applying for both loans, you can apply from now. If your young person has submitted a deferred application to university, so they've applied now, but they're not going until 2027, then they do not apply this year. You apply for finance in the year that you are going to university. So they can wait and they can apply next year. The student needs to enter their details and register before the parent or carer can support the application. So you can both make an account at the same time, but you can't, as a parent or carer, link your account, obviously, until the student's already done theirs. So please do encourage them to log on, create an account, then you can connect your accounts together and you can start the business of supporting that application. So, of course, you need to provide some evidence of who you are to be able to access student finance. So, the student themselves, when they create their first account, they will need to prove who they are. If they are a British citizen, passport is by far the easiest way because they can just put their passport number in. It's really easy. If they're an EU national, they'll also need their EU settlement share code. And if the students from elsewhere in the world, then that's the case in which they will often need to send off actual physical documents if they are not if they don't have a British passport. So usually their passport, residence card, things like that. But the Student Finance website will tell you exactly what you need to send. It's slightly different for people in different circumstances. They will need the code of their university and the course code. So this will be a letter and a number code for the university and a letter and a number code for the course. It doesn't matter if they end up not doing that course or not going to that university. They can change it at any point during the application process, right up until the very, very beginning of the course. So for now, even if they haven't accepted their firm offers, just put in where they think they're going to go. And they can always log back on and change it later. It's a 2-minute job to log in and do it. They will also need their bank account details. Again, if they get a new bank account before they go to university, they can just log back on and change it. But they need to enter their bank account details to be able to progress the student loan application. And the bank account has to be in their name. It can't be paid into a bank account under anyone else's name other than the student's legal name. They will need their national insurance number, and they will also need the email address of a person or people supporting their application. So you, if there is someone supporting their application. If there isn't, fine. But if there is, then this is again a good way for student finance to be able to contact you to say, can you please log on and give the information that we need. So again, it's just some more links here. I'm not going to read them all out to you, but the good thing about the student finance process is there's so much information online, and there is so much kind of bullet pointed step-by-step information of how to do everything. You do not have to support an application. There is no you cannot be compelled, obviously, to support an application. It is up to you and your individual circumstances. If you choose not to, your child will still get some maintenance loan. So they will still get that minimum amount, that 4 grand maintenance loan, regardless. And they will still get the full tuition fee loan. There are, do not, there is no compulsion to support this or to submit information if you choose not to. If you do choose to support the application, once the student's filled all their bits in, you'll get an email inviting you to come and support the application. You create an online account for yourself if you haven't already, and then you will need to provide some information. So mainly about your marital status and your income for the previous tax year. They're the things that they're most interested in. HMRC will then check the information that you've provided. It'll check that it matches their records. It usually takes a few weeks. Um, and often then, for the vast majority of people, the student will just get an email saying, great, we've sorted your application. This is how much you're going to get. Well done. It will be in your bank account before the start of term. Most of the time, you don't need to send anything else. That's it. It's all just checked electronically. But occasionally, they will ask you for something, for a bit of documentation. Most of the time, you can just upload that to the website rather than posting it. Occasionally, as I say, in the case where a student is not doesn't have a isn't a British national, occasionally you do have to post things, but it's quite unusual. Um, it can take about 6 weeks to review evidence, so don't panic if you don't hear back from them straight away. They're obviously getting loads of applications at the minute as well because it's only just open, so they're busy. Um, you will need to provide evidence from the previous full financial year, so 2024 to 2025. And as I've said, they will message your child once it's all done, and the student can log on and check the status of their application online, so they can log in and see what's happening with their application at any point. There is a deadline. The deadline is quite early. It's the 15th of May, but student finance never closes. So you can apply at any point. You can even apply once you've got to university. The reason that that deadline is in place is that they guarantee that if you apply by that deadline, you will have your money by the start of the course. And if you apply a little bit later, there is a risk that you won't get your money in time for the course starting. That makes it quite difficult to pay rent and whatnot. So my advice is to apply as soon as possible. You don't need to wait till you've confirmed a place on UCAS. You don't need to wait till you've made a firm choice, because, as I've said, you can go back in and change those details at any point, including the uni you've said you're going to. That's the same as well. For example, if currently you think that you're gonna go to Sheffield, but actually you end up staying at home, living at home, and going to UCL. You can change that because once the assessment is done of your income, they will just adjust how much loan that you're going to get automatically. So they don't need to do all those checks again. So that's another good reason to get it done early and out of the way. Likewise, if a student decides that they're not going to go to university or they're going to defer, they can just cancel it. So there's no risk of them getting money that they then have to pay back. When they're not at uni, you're not allowed to do that, unsurprisingly. The application can be really easily cancelled. Uh, just a note again at the end, because I'm aware that when we talk about this, it sounds like we're saying that university and student loans are intrinsically tied together, and they are for most young people, because for most young people you can't go without one. But a loan isn't compulsory. You can, if your family has the means, you can just pay these things. You can just pay the fees loan. You can pay your young person's rent or whatever. and as I said, you can apply for both loans, part of a loan, one loan. It's quite flexible. However, what I would say is that it's better to apply for the loan and have the money and then pay it back than not have enough money to be able to pay your rent and end up really, really stuck. So my advice would always be to apply for the loan, uh, and then make any adjustments later down the line rather than how you're panicking in November and trying to apply for student finance while you're at uni and everything's quite stressful. So that's the process for now. That's the uh, how to apply, what you need, and how to figure out how much you're going to get. Obviously, a big concern, a big concern, I would say, for a lot of people is this part. It is repaying it, because as we keep saying, it isn't a gift. Unfortunately, you do have to pay the money back. You start paying back the loan as soon after you graduate. So the year after you graduate. So if you graduate in the summer, you start paying it back the following year. And all the money that you've borrowed, so all the money from the fees loan and all the money from the maintenance loan are stuck together to make one loan, and then you pay back on the whole amount. So you don't pay back a fees amount and a maintenance amount each month. It's just brought together as one student loan. The repayments are based on how much the student earns. So the monthly payment is based on how much you are earning. It's not based on how much you've borrowed. Um, and I hope that makes sense in a second. So you don't start making any payments until you earn 25 grand a year. And then you pay back 9% of any income over 25 grand divided into 12 monthly payments. If you earn at any point less than 25 grand, that payment is paused. And then when you go over the threshold again, it will automatically restart. The repayment period is 40 years. If you do not pay it back within 40 years, everything is written off and, and you just don't pay back what's left. It is not, the student loan is not a traditional loan in that it doesn't show up, it doesn't make a footprint of any kind, it doesn't affect credit scores, it doesn't show up anywhere. So it will never affect if you want to get a mortgage or buy a car or anything like that. The student loan doesn't affect those things. And you can also pay it back early if you decide that you want to. So on the side here, there's a little indication of how much you'll pay per month, depending on how much you earn, because you're paying back, as I said, 9% of all your earnings over 25 grand. So if you earn £28,000 a year, you're paying back 9% of £3,000. You'll be paying back about £22 a month. So a small amount. If you earn 50 grand a year, you're going to be paying back 9% of £25,000, and therefore you are going to be paying a larger amount. So just a little work, there's just some more examples here, just a little worked example here. So you leave uni, you get a good job, your income is £33,000 a year, and you're paid that as a regular monthly wage. Each month, your income is £2,750. You're £667 over the threshold, so you're repaying 9% of that back each month. So you're going to be paying about £60 a month back off your student loan off an annual income of £33. Again, just some examples at the bottom there. And yeah, more examples. So the thing I think to be really mindful of with a student loan is to not be scared of borrowing as much as you need, in a lot of ways, because the amount that you've borrowed, as I said, does not affect the amount that you pay back per month. It means you'll pay it back for longer, of course. So if you borrow £20,000 and you're paying back £900 a year, then you can see how long it's going to take you to clear that off. If you borrow, student three there, if you somehow manage to borrow £1 billion, obviously you can't. You're never going to pay that back, but you're still the repayment per month, the repayment per year, the repayment per month is still the same. It's just that the period that you're paying it back for is longer. So please don't be scared that if you borrow If you take the maximum loan, then your monthly payment once you've got a job is going to be enormous because you've borrowed lots of money. That's not how it works. You pay it back for longer, but you still pay the same fixed amount. In that way, and you see this a lot, it is almost better to think of it as a graduate tax than as a loan because it comes out through PAYE, and it is something that is, that is kind of that moves with your income. Um, so it can be better to think of it that way. Slightly awkward bit because one thing that the government are really bad at actually, and not just this government, all governments since student loans have come in have been bad at this, is being explicit about the fact that there is an amount that parents or carers are expected to contribute to this. And it is very much implied. There's not nowhere does it say you should be giving your child this much per month because they can't say that, right? As I said earlier, you can't be compelled to support a loan or to give to give children money to live on. But there is an implication because that loan is reduced. The more above 25 grand the family income is, the loan starts to reduce, as you've already seen. So as soon as the family earns about £60,000 a year, so that's the household income, then that loan is about halved, less than halved actually. So there is a kind of missing amount there that's a kind of, in a way, an unset expectation that parents will contribute because your family is earning a bit more. The phrasing here, I've taken this from Martin Lewis's website, from the Money Saving Expert website. He's got a really, really good blog on there about this, where he talks about parental contributions and a lot of things to do with student loans in quite a lot of detail. There is a frustration. I do, as I said, I find the lack of transparency there quite frustrating because I think sometimes families expect, well, my young person's getting a loan, they're getting a maintenance loan, so that's obviously going to cover all the costs that they have. But actually, it's not the case like for some people. The If your young person's loan is £4,000 a year, that's probably not going to cover their rent if they live away from home. So there is going to have to be a way for that money to be made up. Um, some links here. There's a really good calculator, as I've said, on Money Saving Expert. There's one on Save the Student. The student finance website itself has a calculator, although that's more about how much you're going to get rather than sort of addressing that argued shortfall. But this is something really to think about in before your young person goes off to university. Please don't assume that the maintenance loan will automatically cover everything they need. They may have to work. There may be, they may need some more money. All right, I'm gonna have a little drink before I talk about it. So obviously, as well as the amount of loan and loans and fees going up and whatnot, the other reason that student loans have been in the news recently is to do with interest rates. And obviously, there's a lot of back and forth about interest rates to do with student loans. What I will say is none of this affects your young people, or rather, very little of it affects your young people. So, just to explain how interest works on student loans. So interest is charged from day one. So as soon as Student Finance England make their first payment to you or to the uni, then that carries on until that loan has been repaid or it's been cancelled. So the interest rate on current student loans is based on RPI, which measures changes to the cost of living in the UK. So that is determined in September using the RPI from March of the same year. So the amount of interest that will be charged on your young people's loans will depend on what RPI is now in March of 2026. Plan 5 student loans, which is any student loan that's taken out after 2023, interest is capped at RPI. So it can't go above RPI. Um, You will see lots of information online about, especially about Plan 2, about and a little bit about Plan 1. Please ignore it because it's not relevant. I am going to talk a little bit about it now. You can actually just not pay attention to this if you're not if you're not bothered. But I did just want to explain it and try and be as transparent as possible. It's important not to confuse current student loans. So that's Plan 5 loans, anything that's taken out after 2023, with earlier versions of the loans. The one that's in the news all the time at the minute is Plan 2 loans. People who are on a Plan 2 loan are people who got a student loan between 2012 and 2023. Their interest is RPI plus 3%. So that's where a lot of the arguments are coming in the media about the expense of student loans because they are paying a lot more interest than the current student loans. Now, I'm not here to argue about whether or not interest should be paid on student loans. I think that's obviously a debate for another time. But please be assured that Plan 5 interest is fixed and it doesn't have that extra 3% that a lot or that those earlier loans do have. So it looks like RPI currently, March 2026, is about 3.6%. So expect it to be about 3.6%. That's the end of of interest and that kind of that part of things. So excuse me for a second. I'm just going to switch my light on because it's getting a little bit dark in here. Sorry. So off the back of that, though, quite appropriately, I'm just going to talk a little bit about other ways to get some money. Because university is really expensive. And the best way to do this is to go directly to the university themselves. So most unis offer a really good range of scholarships and bursaries. These are for students in all kinds of different situations. So students with disabilities, students from low-income families or families in challenging financial circumstances, members of our underrepresented groups, sports, all kinds of different things. Scholarships and bursaries usually don't have to be paid back. They are, a gift, not a loan. Uh, the annoying thing about this is you have to check directly with the uni for each different scholarship. You can't do it via UCAS. A very, very small number of universities, Cambridge is one of them, allocates scholarships via information it's got from UCAS, but most unis don't. And they'll usually need to complete a scholarship, an application of some kind. So, but just please do make them aware that these exist. There's a website called the Scholarship Hub that's a good place to start. And if your young person has access to Unifrog, they can also look up scholarships and bursaries through Unifrog. Just some examples here. I'm not going to click through to them, but just some examples that all different kinds of universities offer uh, scholarships and bursaries. They nearly all have some, so please do take advantage. If you're applying for a course related to a career in the NHS, so midwifery, radiography, nursing, etc., then you can apply for the NHS Learning Support Fund. That is worth up to £5,000 a year, and it also can cover costs that occurred from going to placements as well, like extra travel and stuff. So please do have a look at that. And there is also a good page on the UCAS website about grants and bursaries and how to access them. If your young person has a disability, then they can apply for disabled students allowance, which is support to cover study costs, and that can be due to a cost occurred due to a mental health problem, long-term illness, any kind of disability. So it covers specialist equipment, it covers BSL interpreters, it covers travel, things like that. DSA is often paid directly to the provider or rather than paid to the student, if that makes sense. So the DSA will kind of buy the thing that the student needs rather than giving an amount of money. But it can be quite a significant amount of money that is available through DSA, so it's definitely worth investigating. Students can also apply for an adult dependent grant if they've got an adult financially dependent on them. And just note that if the young person receives PIP, then that is not affected by student finance because PIP isn't means tested. So it doesn't affect the amount of finance you receive, and it doesn't affect the amount, your PIP isn't affected by your student finance. So it's a both ways. It is fine. Into the last bit then. So just a little bit about thinking ahead to managing money at university. So that maintenance loan, that between £4,000 and £3,500, so £13,500, sorry, that you can get to live on per year, has to cover lots of stuff. So the main ones, obviously, accommodation, study materials, travel, food, sustenance, food and drink, um, things like phone, internet, and then anything else that you want to do. Um, I would always recommend contents insurance for anyone living away from home because things do get damaged and stolen quite easily. If you live in university accommodation, your bills are nearly always covered. But if you live in private accommodation, you've obviously got to pay your energy bills and stuff, and then obviously any other costs that come about uh, from living away from home. For example, university accommodation often doesn't have washing machines in shared accommodation. You'll need to pay to use the laundrette. There's one on site, but it can be surprisingly more expensive than you'd expect. As I said at the top of the presentation, this money goes straight to your child into their bank account. They will have to manage it. They'll have to set up their own standing orders, direct debits, pay their own rent, pay their own bills. They can't get next term's loan early, even if they spend all their money. So if they spend all their money, unfortunately, they've run out of money. When that happens, if that happens, when that happens, universities do have hardship loans, but they are loans. So you don't want to get into this really, because you can get into this cycle of having to borrow money from the uni and then you get your next loan installment and it's all gone because you've borrowed money from the uni and round it goes. So to be avoided if at all possible. Another thing to be aware of is student bank accounts often have large overdraft facilities, like they've got really significant overdrafts. These can be a lifesaver, but often immediately after graduation, they get a massive whack of interest added onto them. So do be aware that if you've maxed out your overdraft, as soon as you graduate, it's good. It's better to find a way of paying that off. They can also be restricted for the first term or year. So, for example, you might get a student bank account that has an overdraft facility of £2,000, but for the first year it's only £1,000 to try and stop you racking up 2 grand of debt in your first year on top of everything else. Nope. So paying rent, as I've said, obviously the biggest expense. The average rent apparently for university owned accommodation is £7,400 a year. It can be significantly less than that. It can be significantly more, especially if you're living in London. And it depends how fancy your accommodation is. Some universities have super fancy, basically studio flats that are really expensive. But there is always some less expensive accommodation. And I really would recommend looking at that. Like, don't automatically think, oh, I have to have an ensuite and I have to have this. Like, there are some really nice uh, types of accommodation that are often bigger um, and in more interesting buildings or whatever if you go for things where you have shared bathrooms, shared kitchens. But do be aware, obviously, the more facilities you have, the more you're going to pay. Um, if you are in university-owned accommodation, then you usually pay your deposit kind of now to secure it, but you're not going to be asked for a big deposit when the young person moves in. Um, if your young person is going into private accommodation, like on the private rental market, then you will have to pay a deposit, 4 weeks, 4 weeks rent. They will also likely need a guarantor for any private rental agreements. Um, as I said, uni accommodation will usually cover bills, but private accommodation won't. Any accommodation that's solely occupied by full-time students is exempt from council tax. You can get an exemption certificate from the uni. But if your young person moves in with someone who isn't a student, they can only get a 25% discount. So that's something to be aware of, probably second year and third year rather than now. And another thing is that private accommodation contracts will be 52 weeks a year, will be the whole year. But university accommodation might only cover to term time. So you may find that it's cheaper because it's only covering term time, but they might have to come home in the holidays. So do check that because if your young person is going off to, Glasgow, and taking all their worldly goods with them, then you probably don't want to drive back up there 3 times a year and collect everything they own and drive it back down to London. So do have a look at how much of the year that covers. Uh, Speaking of, of going a long way, travel can be a big cost depending on where in the country you study. If you live on and off campus, if you go into a campus uni, you live on campus, your travel costs are probably going to be quite small because you're living and you're doing all your all your lessons and whatnot near where you live. It'll be walking distance, and there's a lot of entertainment on campus as well. If you live in a city university, then you'll be paying more because you could be all over going to libraries, different lectures, so on and so forth. If you are going out of London, it's generally not worth taking a car, even if you happen to have one. There's never any parking at uni accommodation. There's never any parking on campus. Um, a 16 to 25 rail card is £35, and it's the best £35 you'll spend in a year. You can often save 35 quid just on one journey because it's a massive discount. So I would absolutely recommend one of those. Some student bank accounts give you one for free, which is quite nice. Textbooks can be surprisingly expensive. Most unis have on-site bookshops where you can buy them secondhand. You can check online for slightly older editions. You can obviously get them from the library. As I've already said, be aware of surprise expenses like doing your washing. Um, Services, one thing that can really rack up is subscriptions. Services like Netflix obviously now have subscriptions on account, restrictions on account sharing, but you can often have a kind of add-on account to the main account that's cheaper, so sort of £5 a month instead of £15 a month. Things like Spotify Family can save you loads of money. Just please talk through all of this. You will with your child before they go to uni because it can be quite a shock to have all this stuff to manage out of nowhere, especially if you're living away from home. So hopefully this won't happen. But just as a quick note, just in case, some students don't finish their degrees for various reasons. If you have to withdraw, you have to pay back everything you've borrowed up to the point that you withdraw, obviously. So this is most relevant for the first year because every year we have young people who go off and they realize by Christmas or by March that they've made the wrong choice and they've gone to the wrong uni or they're doing the wrong course and they hate it and they want to pack in and start again. So the first two installments of the fees loan, although the student doesn't see this, just so you know how it works, it's paid at the start of term 1 and 2. So it from student finance to the university. And then the last one is paid at the start of the third term, and that's 50%. So you've got like a small amount and a small amount, and then a big amount that's paid. So you will have to pay back the number of terms that you do. So if you know that you hate it by the beginning of December, you know that you are absolutely not going to stick with this course, it is better to leave earlier so you have less loan to pay back rather than wait and start term 2, if that makes sense, and end up having to pay another term of loan back. You're always charged for a full term. Generally, grants and bursaries don't need to be paid back, but do check. Some of them have restrictions on. If you withdraw during your first year, you can nearly always get full funding for another course. So because this happens, right? You realize that you've done the wrong thing, you don't like it. So in which case, if you, for example, you stop your current course in January, you reapply through UCAS, you start a new course in September, you will usually get full funding, fees loan and maintenance loan for the whole of your degree. If you wait until second or third year, there is a chance that you might only get partial funding for another degree. So that's something to think about, unless you've got really compelling circumstances. So illness, bereavement, in that case, you can be eligible still for full funding. All students are entitled to a year of bonus funding in case something chaotic happens while you're at uni or you have to take a break. I did this. I was really ill in my third year and I had to take part of that third year out and do it again. So I had 4 years worth of student loan instead of three. Um, I would if you are struggling, if you find that you're struggling at uni, you can sometimes suspend your studies instead of fully withdrawing. Please do investigate that because everything is paused if you suspend your studies. You're not racking up debt while you're not doing anything. You're not risking not being able to get the full amount of loan if you need to leave uni. So please do speak to student services as soon as you can if you find that you are struggling at university for loads of reasons, but also practically for this financial reason. So at the end of that roller coaster, a summary. There are two types of loan that you can apply for to help pay for university. The fees loan, which is not means tested, and the maintenance loan, which is means tested. The fees loan goes straight from student finance to the uni. The maintenance loan goes to the student. You only start paying back when you earn over £25,000 a year. If at any point you earn below that, payments are paused. To get the maximum maintenance loan, you'll need to be means tested based on your household income. There are bursaries and scholarships available, but you need to research them yourself. If you leave university before you finish your degree, you have to pay back everything that you've taken out up to the point that you leave. You apply for student finance online through the government website using that link. So, questions. I will take questions, answer any questions through the Q&A in a second. If you have a really specific question that is about a particular personal circumstance or your particular young person that's very, very pertinent to them, please do feel free to email me, and I'll do what I can to help you out. And again, if you just need some help with it, just feel free to email me anyway. I don't know absolutely everything, but when I don't know, I will usually do my best to find out for you. And at the end here, there are just a load of really, really good links, calculators, information from student-facing websites, from government websites, scholarships, UCAS stuff, the money-saving expert stuff that I talked about. It's all there. I'm just going to leave my email address up for a second for anybody who wants to write that down. Excuse me, and I'll start to have a look in the Q&A and see what I can ask. If you don't want to stick around for the Q&A, of course, this has been quite a long presentation. Please feel free to go and enjoy your evening. And I will be with you to answer questions in a second. So, first question, is an Irish passport also acceptable? Yes, usually, yeah, it is. Due to kind of like residency agreements, Irish students usually qualify for home fees. So it should be acceptable. Please obviously do double check. Uh, Question two, do you apply for tuition fees loans each year or for the entire course at once? You apply year by year, so you have to reapply every year. So so you're applying now for 2026-27. At this time next year, you will have to apply again for the next year's worth of loan. That's because the fees amount can change each year, but also your household income will change year by year. So the amount might go up or go down depending on the household income. Do the same rules apply if going to university in Scotland? Yes, they do. If you are a Scottish student born and resident in Scotland, then there are different rules about fees. You don't pay them. If you are an English student, unfortunately, going to university in Scotland, then yes, it is the same, exactly the same as going to university in England. Uh, Question about interest. What about the interest on student loans and how it grows? What is the percent on average? As I said, the interest is pinned to RPI. So the interest that you'll pay per year is based on what RPI was in March of that year. So for loans starting in September, it looks like it will be 3.6% for this year. And as I said, yes, I can absolutely share these slides by email. I don't have, because you don't have to register to join this webinar, I don't have people's emails automatically. But if you drop me an email, I will get those slides over to you tomorrow before we break up for the holidays. That is all the questions I have at the moment. If we've got any more, please do drop them drop them in here. Oh, thank you. So just a nice comment there about that 16 to 25 rail card. About us letting people know earlier in the academic year. It is brilliant. It saves so much money. And sorry to anyone who found out after they'd paid expensive train journeys. Uh, Right, there we go. Uh, if I apply for student finance in July, does it mean I'll settle the tuition in of the first half year? I'm not quite sure what that means. So if you apply for student finance in July of this year to start in September, then that will be the application for the full first year at university. So the amount that you will be assessed for is the amount that you're going to get for September through to the following September. And as I said, in March next year, you will need to reapply for finance for the year after. So deadline, just to reiterate, the deadline is the 15th of May. That is the point where student finance guarantee that the young person will get their money before the course starts. In my experience, especially if you are a home student, if you're a British student, home student, you've got a British passport, I find it really doesn't take them that long to do the assessment. And so you can wait a little bit later, but just to be on the safe side, I would recommend that you apply sooner rather than later. Um, This is a good point, actually. If your circumstances have changed really dramatically between the last full financial year and now, there is a way of telling student finance that. So, for example, if you were employed in 2024-25, but then you have now you've now lost your job, so you now don't have that income or your income has changed. There is a mechanism through student finance that you can tell them that. So when you log on and they ask you for that financial information, you can give them that information and they can do a reassessment based on your current income. So that is worth knowing as well if you've got a dramatic change in circumstance over the financial year. Uh, Sorry, I'm just reading these questions here. Uh, can you the so again about the student loan bonus year payment? You can still get a student loan to do a master's. Yes, um, you are able to get a fees loan, a student loan to do a master's. Uh, if you have more than one child at university, that is a really tricky one. It is a really tricky one. You can be eligible for for higher maintenance loans because you've got more than one young person at university. It does take that into consideration, but it isn't always completely fair. It does it on a case by case circumstance. And it does sometimes mean that one of your children can end up getting a slightly different amount to the others. Um, it's not the best system, but they do try to take it into account, which is you, something they should maybe be better at. After graduating and having a job, can you choose to repay the fees in one go instead of repaying monthly? Yes, you can pay early, and there's no penalty for paying early. If you won the lottery and you wanted to pay all your student loan off, then you can absolutely do that. Or if you get a really high paying job and you want to pay it off quicker, then that's completely fine. You can do that if you choose to. Do fees sometimes apply to a year in industry if that's part of the course? There's a slightly different situation for university for sort of sandwich courses where one of the years is a year in industry. The fees are, or same with a year courses where there's a year abroad. There is a different fees arrangement often for that year that will vary depending on the course and whether the student is being paid or what's kind of happening with that year. But yes, there is a different circumstance, a different situation for that for degrees where one year is not at the university for whatever reason. Okay, I think that is everything, which is great. Oh, sorry, one more, and I think I will call it here because it's 7 o'clock. So I think I will probably say this is my last one. And if you have any more questions, please do email me. Are there specific circumstances for single parents? No, because it's a household assessment. So if you are a single parent and there's only one income in that household, then that that will be judged actually the same as if there are, more if there are two incomes in that household, because it depends on the amount. So two people earning, quite a low amount of money, one person might be earning much more money. It's not on the number of incomes, it's on the overall amount of money that is coming in. So there isn't something specific for single parents. It is a household income assessment. Great. Thank you very much, everyone. I hope you found it useful. Please, as I've said, do drop me an email if you have any more questions, and have a fantastic evening. Thank you. Thank you very much for joining us. Goodbye.